Alright folks, a lot have happened after my last video about Coinbase listing. So today I'm going to give you an update on what happened and if I have bought Coinbase shares and at what price. So if that sounds interesting, then keep watching. Hello, welcome everyone. This is Yusing at Wild Finance. So one day before the Coinbase listing, Nasdaq gave a reference listing price of $250 with a valuation of $65 billion. But at the opening, the price jumped 52% up to $381. And on that listing day, the price reached as high as $429, but then plunged to $309 and closed at $328. And currently it is trading at around $330. So like I said in my last video, the price swings heavily on the listing day and it was definitely a volatile event to watch. But the price didn't go as crazy as I expected and the volume is somehow quite low after the initial opening minutes. So maybe the retails were not participating heavily yet because the Google search trend didn't really spike prior to the listing. It only got more search on the listing day when mainstream media were talking about it. And besides, Coinbase airdropped 100 shares per employee as a gift just before the listing. And they have like 1,700 employees. There is no lockup period for those shares. So I can imagine a lot of them taking profit on this. I mean, I would too if I got those 100 shares for free. I might sell half of it. And on last Sunday, there was a lot of FUD on Twitter saying Brian, the CEO, and the CTO, CFO, and different venture capitalists sold off their shares on the listing day, which caused a bit more fear in this space. But guys, first of all, it is a direct listing. They are supposed to sell their shares because otherwise from where we can buy those shares? And secondly, this Twitter information is misleading. It didn't provide you the whole picture. Brian didn't sell 71% of his entire holdings. He sold 71% of those shares that he agreed to list for public sale, which he should be selling in anyways, and those represents just 1.5% of his entire holdings. But anyhow, this was actually a good buying opportunity for me since it is within my buy range according to my estimations. So I actually loaded up some coin shares on the listing day at a price of $381, as you can see here. Although the current price is way below my buying price, but I'm still long-term bullish on Coinbase, so I'm currently loading up more shares and will keep loading if the price goes lower, because I believe it will do very well in the coming 1 to 2 years. But truth to be told, I kind of went against my own advice of waiting for few days after the listing to let the volatility come down. But instead, I just FOMO'd in because I saw the price was under $400. That was under my entry target. So learn from my mistakes and never FOMO, because now you have the opportunity to buy it way lower at around $320. Now I want to show you some more details on my projections based on 3 scenarios: the bear case, the normal case, and the bull case. So those numbers are from their earnings report and some small guesses for Q1 2020. I hear a lot of people say that, oh gosh, I get dizzy when I see those numbers like this. But look, it is simple. In fact, you should do the cash flow statement or the income statement every month for yourself. It's gonna help you get a better understanding of your financials. So the total revenue is basically your monthly salary or any other income you get. And your expenses are all your living costs, utility bills, rent, food, entertainment, and so on. If you use your total revenue minus income tax and your total expense, then you get your net income, just like the company does. Simple as that. Then you can use your net income divided by your total revenue, then you get your profit margin. If it's 50%, then congratulations, your cash flow is very healthy and you probably have lots of money left to invest. But if you get only 10%, don't feel bad about it. You just need to have a closer look at your expenses to see where you can cut off some expense. But anyways, let's go back to those numbers again. Currently, their biggest revenue is from transactions like trading fees, crypto debit cards, and so on. But they do offer other services like borrowing and lending, providing yield on your staked assets. Meaning if you lend your crypto to Coinbase and Coinbase in turn lends to someone else, you get to earn interest on that. And this is getting very popular because most people who bought Bitcoin stores it in a hardware wallet. So those Bitcoins does nothing for you except you are waiting for its price appreciation. But if now you could put your Bitcoin into work for you, meaning generate yield up to 6% APY, annual percentage yield, then why not? And usually those yield are paid out in the currency you lend to Coinbase. So for example, if you lend Bitcoin, then you will get paid in Bitcoin. And this is actually much better in my opinion because my goal is to stack more Bitcoin in the long term. Anyhow, Coinbase is determined to grow its other services to diversify its earning sources so that it will reduce the dependency on transaction revenue, which is highly volatile and highly correlated to the crypto bull and bear market. So according to Coinbase, although subscription products and services do not currently contribute a significant portion of net revenue relative to our trading business, we experienced 126% annual growth in revenue from these products and services from 2019 to 2020. We are committed to growing more stable revenue from subscription products and services and expect that they will contribute a larger portion of our total revenue over time as our customers connect with the broader crypto economy. So now we have a better understanding of where Coinbase is aiming to grow in the next few years. Then we can put together a better guesstimation. So in my bear case, I am projecting a negative 10% growth, meaning 10% decline in their transactional revenue year over year to 2023. The reason being that they do charge a high percentage in trading fees currently, but I think it will have to come down eventually due to competition and so on. And I am giving a modest 20% growth in other revenue, which was 126% growth from 2019 to 2020. So 20% is really like the minimum I would expect. And the reason I only project to 2023 is because it is in such a disruptive sector that things change a lot in a rapid speed. So too long-term projection simply doesn't make much sense. And that is also why many established hedge funds and traditional fund managers are having difficulties to evaluate Coinbase by using their old school Wall Street formulas. Now, I'm not saying that those formulas do not work on this, but you do have to consider Coinbase is an unconventional investment. And in fact, my evaluations are probably very wrong too, so only take this as an entertainment. Well, then that makes its net income just under $500 million per quarter. If you times it by 4, you get an annualized net income of $1.99 billion. And if you divide it with the shares outstanding, then you get the earnings per share, which is around $7.6. Now, with the different PE ratios, you get different price targets for Q1 2023. If you buy the shares for $330 today, then you get those annual returns according to different price targets. Now, you may think, well, just the 7.8% return is really just average. And I agree, but that is based on the bear case, also with a conservative PE ratio. So if you are really bearish on this company's future earnings, then I guess it is not for you. Now, if we look at a somewhat neutral case, I am projecting a negative 5% growth in their transactional revenue and a 40% growth in other revenue. That makes its net income around $574 million per quarter and an annualized net income of $2.29 billion. And if you do the same math with a PE ratio of 50, you get a price target of $439 and an annual return of 16%, which is above the average return. If you are a bit tilted into the neutral bullish case, then you might want to use a P ratio of 70. Then in theory, your expected annual return could be around 43%, which is really good. Now in my bull case, I'm projecting a 0% growth in their transactional revenue and a 60% growth in their other revenue. That makes its net income around $656 million per quarter and an annualized net income of $2.6 billion. And if you do the same math with a PE ratio of 50, you get a price target of $502 and an annual return of 26%. And if you are the bull, then you can use a PE ratio of 70. Your price target could be $703 with a potential annual return of 56%. Now let me tell you, where am I? I am between the neutral and the bull case, and I am using a P ratio of 65. So my personal price target is somewhat in $600 for Q1 2023. And that's if their following quarter's earnings doesn't deviate too much from my neutral and bull case. Now I have shown you how I evaluate this company and what logic I'm using behind my projections. So I would urge you to do your own evaluation and don't just blindly listen to me, because this video is purely for entertainment purposes and I'm just a guy making YouTube videos. And in fact, I think everyone would come up with a different evaluation, but anyhow, it is important to learn how to evaluate a company. So if you like this video and you think you have learned something from it, then please smash the like button for me and don't forget to subscribe if you haven't already. And that's it for today. See you next time. Bye bye.